Hey guys, Victor Pena here, founder and CEO of OmniPrint International. I'm super excited to do this video for you guys today. It's about the #1 hack to have Uncle Sam cover the cost of your expansion and your equipment. So I've been planning to do this video for a long time. I'm super happy to deliver it for you guys today. And make sure that you like, subscribe. If you guys have tax questions, make sure you hit it in the comments because we're here to help you guys and we empower business owners globally to thrive with our print-on-demand solutions, and tax strategy is a super important way to do that. One thing that's super important, I'm focused on making this complex topic simple, all right? That's my main goal. I want to talk to you guys first, #1, a little bit about backstory, why I'm doing this for you guys. I get a lot of requests from people on how they can optimize their tax strategy, right? And I started this from zero, just so you guys so you know. What I cover is stuff that I've done, stuff that is legit, right? The #1 thing I want you guys to think about is that a lot of the stuff that we were taught wrong, all right? So a lot of you guys, when I start talking to you guys, hey, I like to pay cash for everything. I like to have my cash under my mattress, all right? The reality is when you're doing that, you're not reporting your taxes properly, right? You're not giving your company or your business a shot to grow properly, right? So that mindset, we gotta just press delete, guys, because you end up looking bad as a business on paper, right? Banks don't wanna touch you, but you know that you're making money. You can't qualify for anything. So today I'm gonna show you a strategy and a few strategies to help you push through that mindset. Why am I doing this? It's because of the requests, right? So if our mission is to empower you guys to grow, part of this is unpacking these topics for you guys and making sure that you guys learn the proper way to grow your business. You know, I went through the same stuff that most of you guys do. I use cash all the time. You know, I didn't really do lending or any proper tax strategy, maybe, you know, around 8 to 10 years after I start the business, right? I just grew it off of hustle, sales. You guys know I'm all about sales cures all. At some point, when you start making profits that exceed any sort of write-offs, you have to use more tax strategy, and this is one of them. On hindsight, I didn't get ahead of myself, so maybe it was good, right? So, and I also didn't have all this access to new stuff, new education like you guys do, so make sure you take advantage of it. Why am I qualified to deliver this for you guys, right? I'm not a CPA, all right? Make sure you have your own research done when it comes to that. Everybody's tax strategy is going to be different. You know, every state is different. So I'm covering like federal guidelines. Federal means that, you know, all of the US, right? You know, and I'm showing you guys stuff that I use, stuff that I've gone through, my knowledge, right? My opinions. And that's what I've used to build multiple businesses, 8-figure businesses and plus, right? But like I said, if you guys don't use the proper tax strategies to grow, then what's going to happen is you're going to hinder your own growth, all right? And remember, if you have questions, comment, like, subscribe, hit the bell. These videos take a ton of time to do, a ton of time to plan out, big team. So make sure that you guys give us some love in the comments and share, all right? Let's get rolling. How to have Uncle Sam cover the cost of your equipment and vehicles. I'm going to show you guys right now, all right? So first, there's important notes for you guys to consider, right? Why this is valuable. The government wants to reward you for expansion, all right? Everything that I cover is 100% real, 100% legit, 100% legal, all right? The government and the IRS, they want you to grow and they want you to spend money on your business to grow it. This is a complex topic, all right? And I'm going to make it simple, but I want to cover some definitions, all right? Definitions are important, especially write-off, all right? Everybody's been seeing these memes where people buy shit and they're like, oh, I'm going to write it off, right? But the reality is to use something as a deduction of taxable income, all right? So keyword here, you guys have to really understand is income. You ain't going to be writing off anything if you don't have any income, all right? So there's other videos that we're doing on sales and income. Make sure you hit those up, all right? If you want to learn how to have your top line income, all right? So that's the definition of a write-up, all right? You need to make money, all right? The second thing I want to talk to you guys about is depreciation, all right? And specifically, you know, depreciation, all right? A reduction of the value of an asset with the passage of time, due in particular to wear and tear. What is that saying? It's saying that the government's letting you devaluate an asset because it's assuming that you're using it on a daily basis and wearing it down, all right? That's depreciation. It's depreciating, it's wearing down, all right? And today, we're specifically gonna talk about bonus depreciation, all right? Bonus means that in the past, you had to write stuff off that you bought slowly over a period of years, right? Depending on your situation. Now, there's new recent tax laws that allow you to write stuff off faster that first year, right? So that's bonus. Think about it like a bonus. Whatever I buy, bam, I write it off, right? So that is two main definitions. I want you guys to understand that stuff before I dig into numbers and all that. And remember, make sure you're commenting. If you have questions, share this to other business owners so that they can also get some of this value, all right? We're off to the third part of this. What can you buy and let Uncle Sam cover the cost for you legally? We're gonna get into this list right now. So a little context here, right? There's certain things that you can write off, and I'm all talking about legit stuff. This is not fluff, all right? So I assembled a quick list for you guys so you can get an idea of what I'm talking about, all right? The equipment, the stuff that you primarily can write off is your business expenses, right? So right now we're gonna talk about all equipment used for your business, right? So it's gonna be like printers, all right? Heat presses, ovens, other types of equipment, also software like our workflow solution to make you more productive in your business, all right? And all sorts of other types of printers and equipment, all right? The main point is they're needed to be used for business use, all right? So a couple of little foundational things. You need to be filing taxes, all right? You need to have an LLC set up. You need to have a business bank account and all that stuff. We do a lot of other videos. If you have questions on that kind of stuff, go back to that because I'm not gonna cover setting up your business right now, all right? The main point is you have to be filing taxes, all right? So we're gonna go on to the next section so you guys can get that content right now. This one is a super important one, all right? How can I write off my car? Can Uncle Sam pay for my car? All right, so check this out. This is I always do my research when I'm doing stuff, right? Because I want to bring value to you guys. This topic is by far the most hyped up topic that I saw online, all right? It's the stuff with most views, stuff that can get complicated, right? But this is important. I'm talking to you guys about doing legit stuff. This could get shady super fast, all right? So what kind of car I can write off? I can write off cars that are business vans, business vehicles, all right? Stuff over 6,000 pounds is considered more of a business vehicle that you can write off, and the tax code allows you to do that stuff, right? If you want to write off a Ferrari, I can't show you how to do that. It gets more complicated. There's other videos that help you do shady shit. This is not what we're doing today, right? Just to give you an idea, my Range Rover is over 6,000 pounds. So I don't know, you guys can tell me who paid for that thing, all right? So if you're just joining, by the way, I'm talking about the #1 hack to have Uncle Sam cover the cost of equipment for your business, all right? And we're covering these topics for you guys so you can grow. And I'm making these complex things simple for you so that you can be empowered to take that and use it in your own strategies, right? And remember, again, I'm not a CPA, so do your own research. Everybody's individual situation is different, and I always consult with my CPA before I do anything. Don't come to me complaining that you did some shady shit and now you get audited, all right? This is not what this is about, all right? So let's go on to the next section. I'm gonna show you guys how to pay for your DTG equipment and other equipment like our Freejet 330TX Plus. Right now, we're gonna jump into some examples, how to have the IRS cover the cost of your Freejet 330TX Plus DTG printer, and we're gonna get to it right now with some examples. All right, one thing I want you guys to understand, I'm breaking this down in a simple way, so pay attention. These numbers are simple. Don't pull up your phone, don't gloss over. All right, this is to help you guys. And remember, if you have questions, put it in the comments, subscribe, like, hit the bell so that YouTube can share this video to others. We spend a lot of time doing this for you guys because we want you to grow and expand. First, I'm gonna do a calculation on the whiteboard because we wanna talk about income, all right? And I'm gonna take a traditional income that you guys make so we can come up with some numbers, all right? So let's hop to it. The number one thing about depreciating, having Uncle Sam pay for your stuff is you have to have income, all right? Income. And if you guys want to judge my writing, it's all good because it's the worst in the planet and I could tell you guys myself, all right? So we're going to talk to you guys about how I'm calculating the income so you guys can know and do the numbers for your own situation, all right? So if I have 50 shirts a day, all right? 50 shirts per day, all right? And I'm generating 10 bucks of profit per shirt. And I've done other videos on how we calculate this, so go check those out if you have questions, all right? That means that I'm making 500 per day. All right, what is that? If I times that by, depending on how many days you work, right? If I multiply that, typically I'm gonna take 20 days, all right? For some of you lazies that don't work on the weekends, all right? So 20 days, all right? See that? Simple math. So that's 10,000 bucks a month times 12 months. All right? That's 120 grand. The good thing about this is you can pause it, do the math, replay. All right, this is super simple math, guys. And why am I showing this to you guys is so that you can do your own numbers. All right, these are numbers that we calculate. But I want you guys to understand how I got them, all right? So now let's move on because I told you that writing stuff off requires income, all right? So if I did 120,000 for the year, all right? And this is gonna be my write-off, right? The write-off calculation. All right, so 120,000, that's my income. All right, 120,000 is my income. And typical package for a Freejet 330TX Plus is about $25,000, right? So what am I gonna do? This is important, pay attention. All right, so if you made this income for the year, all right, and now you have an expense of a qualified equipment like our Freejet 330TX Plus or any other equipment, all right, I'm also going to do an industrial calculation with the cheetah, all right? So make sure you hang on for that. I told you guys how much the package is. This is what you're going to do. It's simple. You're going to deduct whatever you spent on the equipment. All right? You're going to deduct that right off the top. So the government is saying, all right, you made 120,000. Now take off 20,000 that you spent, or 25,000 that you spent for the equipment. All right. So again, guys, you have 120,000 of income, a $25,000 expense. The government's saying is, let's wipe off this expense and minus it from what you made. All right. So now you're going to be at $95,000 in taxable income. All right. That is a super clean calculation for you guys to say, all right, well, what kind of equipment do I need to get before the end of the year and how much to be able to offset the income that I'm going to pay, all right? If you look at what the tax calculation is for what you're saving, all right, and what you have to pay in taxes, then it's going to tell you guys what you need to do, all right? So this is the other thing, all right? So if you're deducting $25,000 in equipment, all right, I tell a lot of you guys, stop paying cash for stuff because of this calculation, all right? So a typical payment, I'm gonna go into this stuff, right? A typical payment for a Freejet is about 500 bucks. And also depending on your situation and your credit and all that stuff, don't come at me with bad credit and be like, hey, why is my payment $1,000? That's your fault, all right? So this is a regular old payment, all right? What if we do this times 12 months? You're at $6,000. All right. The real cost of your equipment is actually not $25,000 in the first year, right? It's $6,000, and you already took a write-off of $25,000. All right, so I want you guys to really get this. You're spending $6,000. All right, you wrote off $25,000. And this is the other kicker. All right. Because you're generating cash flow. The government's telling you generate cash flow, guys. That's the number one thing you got to do. And I will pay for the equipment when you do that. So those 95 grand that you got left over with is actually 95 grand. And actually this thing requires its own screen. All right. So 95 grand. That was your income. That's your cash flow. All right. I'm going to do it big right here. That's your cash flow. You paid $6,000 in payments to generate $95,000. I did the math on the return. It's hundreds of thousands of percents. All right, you guys can do the nerdy math if you want. But who wouldn't spend $6,000 for the year to make 95? All right, that's the number that I want you guys to think about. Because if you're saying, I'm going to take 25 G's cash, give it to someone, all right, and then hide the money under the mattress, that's where you're getting the math wrong. That's why I want to do this math for you guys. This is what the wealthy do. This is what the business owners that want to grow and scale do, all right? So make sure that you're paying attention to this. All right, so, and remember, these are numbers based on my calculations. My job is to try to simplify this stuff for you. This is super complex. Get your CPA involved. Have the call, all right? Do your tax planning so that they can help you, all right? And remember, if you have questions, just comment down below and, share this, like, subscribe with everyone, all right? So we're going to move on. The next thing I want to show you guys so you can stick around is that how the big guys, big fulfillment centers, big shops, big money people don't pay for the equipment at all and the kind of cash flow they generate from products like our Cheetah Industrial Direct-to-Garment Printer, all right? So stay tuned, and we're going straight to that right now. All right, guys, so how do the big guys buy so much equipment? All right, I'll start with income and cash flow, all right? So income, and I'm going to show you this calculation so you guys can know how I'm doing the math, all right? So if I'm looking at 500 shirts, right, which is the mid-volume for a Cheetah, right? You can do 500 to 1,000 depending on your people, your speed, your process, all right? So I'm going to do 500 to keep the numbers easy, all right? So I got 500 shirts. It's kind of like a mid-volume for your Cheetah Industrial Direct-to-Garment Printer. You can go to 500, 1,000 shirts depending on your shop, speed, and all that. I'm doing 500 just for easy math, all right? I'm also doing $5 a shirt of profit so we can calculate what the cash flow is, all right? So at $5, all right, you have 2,500 a day, all right, times 22 days, because, people that have Cheetahs, they also work Saturdays, all right, so that gives me 55,000 a month in income, all right. This is 55,000 because I'm taking $5, which is average profit for a Cheetah customer, all right, and that's how I'm getting my 55,000 per month, all right? So now we're going to take that, and what is that per year, all right? Because I want to do stuff yearly, all right? So that's going to give you $660,000 in income, all right, and cash flow for your business, all right? So let's do a little bit of more math, all right? So if I go, and I'm going to put income over here again because now I'm looking at $66,000 in income. All right. That's the holy grail of how you start to have Uncle Sam pay for your stuff. You need to have income, guys. All right. That's why you need to report the income that you make and not put it under the mattress. That's why I want to show you guys these strategies so you can do this stuff legit, legally, and then grow your business like the big guys. All right. Average cost of the Cheetah Industrial Direct-to-Garment Printer is $250,000, all right? So let me do this math for you, all right? This is a simple one. $660,000 minus $250,000 of the equipment cost leaves you an income of $410,000. All right? Now we're going to take that, and at 22%, which is IRS typical tax brackets, yours are going to be different. Make sure you check what that is, all right? You're going to owe taxes of $90,200. All right? That's my taxable income. So now you know how the simple write-off works from the net profit, right? From your income. I want to show you guys the other magic, right? That uses cash flow, right? Remember, nobody is ever buying a $250,000 piece of equipment cash without financing, all right? I have not seen it, all right? So this is why, all right? So at $250,000, typical payments that I've seen are about $5,000 a month, all right? And we're doing some simple numbers. Yours are gonna vary. Call your lender, ask them what your payments are gonna be, all right? Don't say, hey, how come my payments are high? You might have shady company credit, all right? That's your fault, not mine, all right? So, but I wanna show you guys how I'm doing the numbers so you can just plug in your numbers easy, all right? So let's jump into that. $5,000 a month. All right, what does that do per year for you, right? So that's going to be $60,000 that you have to pay. $60,000 is your payment. Why am I showing you this? Because it's going to help you in the next calculation. I want to help you guys blow through this easy and be able to plug in your numbers, all right? Why did I make you calculate the payment? So that you could talk about and learn and calculate your own and do your cash flow calculation, right? So I want to talk to you guys and make you aware of how we're doing this thing. Cash flow is number one, all right? So for example, if you have your net income of $660,000, all right? And what we're calculating here is cash flow after you write that thing off, all right? And you're gonna have, let's see, $660,000. You're gonna minus your taxes, which are gonna be $90,200. Based, your taxes are gonna be different, all right? The payment, why did I make you calculate the payment? Because you can minus that from your cash flow. You can deduct interest, but you can't deduct this payment on the other calculation, right? So that's why I didn't even bring the payment up. You're gonna deduct it from the cash flow so that you can know how that works, all right? So your net that you made by having Uncle Sam pay for a printer for you is $509,800, all right? That's how much cash flow that you made, all right? So on the other screen, we're gonna bring that number over, $509,800, right? And why am I showing you guys this number? So you guys can do it with your own numbers, all right? But if you made $509,800, all right, and your payments were $60,000, right? So you spent $60,000 to make $509,000. All right, that's how these guys are making so much cash, and that's why they can buy so much equipment, because they have the flow of money, cash flow, they have the orders, they're doing the orders, all right? And the more equipment they buy, the more money they can make, right? Pay attention to what I just said. The more equipment you can buy, the more money you make, right? I talked to you guys earlier about mindset, right? If your mindset is saying, I don't want to buy stuff because it's going to cost me money, right? I'm showing you a way where stuff doesn't cost you money. It's actually making you money, all right? All you have to do is make sure you check out these other videos on how to make the income, how to make more sales, all right? Because these guys got that down, all right? So my job is to tell you is how these big companies, big fulfillment centers are buying equipment, and Uncle Sam is helping them foot the bill so they can make more cash flow, all right? So these are easy calculations, all right? Do them yourself when it comes to what the numbers are for you, all right? And make sure if you have questions, put it in the comments, all right? This gets more complex because if I do 509 minus 60,000, I get the exact cash flow, right? So I'm showing you guys some simple numbers so you can plug in your own calculations, all right? Because it's all about cash flow, like I said, because if I take what I made minus my payments, my actual cash flow for having Uncle Sam pay my $250,000 printer is $449,800, all right? And like I said, this gets super complex. Don't mess up and do stuff from a YouTube video, all right, guys? Call your CPA, say, hey, you know what? I need to do this. How do I do this, all right? So I'm here to show you guys how to grow and expand, how the big guys have Uncle Sam cover the cost of their equipment so that you guys can win and do that too. All right, so we're going to the next section. I'm going to cover a few more things. This is the most complex when it comes to the math that I'm going to do with you guys, so it could be easy, like I said. So let's go. So now that you saw those calculations, the goal was to make it easy for you guys. So we're going to run into a few questions. All right, these are the top questions that I get about tax write-offs, and I'm answering them for you right now. All right, so also if you have questions that are not covered here, put them in the comments, all right? And don't forget to subscribe to the channel, hit the bell, and share this stuff so that YouTube, the YouTube almighty gods, can share it to everyone, all right? So let's go into it. First question, what dollar amounts are covered, all right? And is there a limit to what I could write off, all right? So that's a great question. The last time I looked, there's no limits of what you could write off. Obviously, if you're not making enough income, what's the point of writing off something huge, all right? So there's no limit to bonus depreciations. There are some other technical limits like $2.5 million. I don't want to talk about that. Why? Because it's some other limit that is too complicated for this easy calculation that I gave you guys, all right? Some tips, all right? Don't try to write off every little thing on its own, all right? Keep invoices at least over $2,500. Otherwise, your CPA is going to fire you for doing all this complicated work, all right? So let's say you're gonna buy some equipment for shooting for your studio, bulk everything up and make the invoices higher so that you could calculate it easier, all right? So the more you spend, the easier it is to account for it, all right? So next question, all right? This is an important one, all right? Because before, all the equipment needed to be new, all right? And the question is, can the equipment be used, all right? Right now, anything new or used could be written off and you could use this strategy for it, all right? So that's a great question to keep in mind. Next question, do I have to pay cash or can it be financed? All right, if you guys looked at my other examples, I did it all of financing. Why? Because it's the best way to leverage your company credit to create cash flow without having to put your money into equipment, all right? If the government is giving you help so that you can spend on equipment, right, and you're able to write it off, it's better to deduct it fully and only have the cost of your financing, right? That's why I did all those calculations with finance, all right? Get educated about that because it's the holy grail of cash flow when it comes to equipment, all right? Next, I get this question all the time. Can I write off real estate, all right? The short answer is that you can't use bonus depreciation with real estate, but there's other strategies that's called cost segregation, all right? That's their version. That's real estate version of bonus depreciation, all right? I'm not gonna get into that in this video. I'm gonna get into it in a different video for you guys because I believe each and every one of you guys that's starting off in business should be buying your first warehouse, your first office where you're doing your work because that is the #1 hack to grow your business and make money in real estate as well. All right, so I'll do a different video. Just look out for that one. What can you do to take advantage of the tax code and write off your equipment to grow your business? All right, so number one, guys, tax planning. All right, this is what you can do right away. We're shooting this video. It's early December. All right, and the idea is you better be doing your tax planning like right now. All right, and right now is the time. If you're at capacity when it comes to your production in any way, you need to get this equipment. You need to finance it right away. All right, and you also need to get it delivered and put in service before the end of the year. All right, also, if you are planning any sort of equipment purchase, all right, the time is now to buy your equipment right now, or have so much net income that new equipment can help you next year. All right, make sure that you're doing the decision right now and buy your equipment now. If you are at capacity, all right, and you need more equipment to grow your business, this strategy is going to help you grow. All right, I did this video to help you grow, show you how to easily do your calculations. All right, make sure you invest in your business, especially if you have net income. Why? Because these are your two choices. You give it to Uncle Sam, or you invest back into your business for your capacity this year for a holiday rush, and you also do it for your growth next year. All right, I talked a lot about cash flow. All right, what you need to do is buy assets that generate cash flow, all right, so that you could sell more, right? That's important. That's why I did these calculations for you guys. Make sure you go back, do them on your own. If you need help with your income, all right, make sure you're going to our boot camps. The links are below for the boot camps. Make sure you're hitting the sales videos, how to make more money. All right, so we're here to help you guys grow, and make sure that you're always subscribing, commenting, and giving us some love in the comments, because that'll help us grow, help the channel grow, and share it to more people out there. All right, see you guys on the next video.